Hello, today is January 27th, 2018. My last calls, I was looking for higher prices on Friday, a pattern with an early high, and a good chance to hit a new all-time high, which is what we got. Monday's pattern should have an early low. Doesn't preclude gapping up first, and frankly, unless we gap up first, I think the market's in for a significant drop, and here's my target. Not a stop and reverse, just a target. Here was the early signal to buy from MEJT. Here's the support level. MEJT says the rally's false, gives us a target 28.57.61. Absent gapping up sharply, that's my call. We have a wall into the close. We have a Hobson close right at the high of the day. It's usually a good sign we're going to gap down at the open, but when you hit a new all-time high, it's just going to work half the time. Rallying all day long on a Friday almost always carries through into Monday's open. So based on that, you would think we'd open higher Monday, and we might. If we gap up Monday, a lot of what I'm going to say gets negated before the open. But it's real trouble if we don't continue the advance on Monday, particularly if we gap down sharply Monday, particularly if we gap down under this low. We're running into some strong resistance here, which I'd like to outline for you. Here's the daily chart. This is the average true range of Friday's trade. You can see it's the largest move, largest gain of this whole huge rally. And unfortunately for the bulls, the largest gain of an unrelenting move like this tends to happen on the final day of the move. It's not the only problem. Rallies like this tend to be Fibonacci targets of the prior consolidation. You can set that at 50%. There's your target right on the nose. You can look at this target here, 38.2%. 50%, and there's your target. So we're at a Fibonacci target. That's not the only target. The 29th, Monday, is one of my dates. These don't always work, but they work more often than they don't. So in addition to price targets, we have a time target. This was the chart I showed last week, or maybe the week prior to that. We have your A, your B, your C. We had a few targets from 28.66 to 28.71. Well, the high on Friday was just 1 point away from this target of a huge pattern. And if you want Fibonacci targets, here's your A, here's your B, and here's a perfect 5 waves up. 1, 2, 3, 4, 5. You don't get much nicer Fibonacci targets than that, with all these relationships of the 5-wave rally, which one can count as complete at the high. Well, this is what I showed earlier. The largest move often comes on the last day of the leg. But that's not the only problem. A major problem is on the monthly chart. You connect the low back in 2009 to this high, you'll see just a perfect trend line with numerous hits, and we have rallied right to, but not through, that trend line in the straight line move. The rule for this, when you have a strong rally to, but not through a resistance area, trend line resistance, is you either gap up over the line or the line holds. That leads us to Monday's call. The bulls have to gap up Monday and hold it to continue the advance at this point. I can't say it's impossible. It's a pretty strong rally. But there's, I think, greater than a 50% chance that that's not going to happen. I think there's a significant chance of at least 50% that we move down sharply at the open, probably by gapping it down. Particularly negative would be if we gap down under these lows, which I can't predict. But if we move down sharply at the open, you can make a good case for this price printing and for this high holding, and perhaps even for the end of the leg. And that's today's call.